Welcome to Bound and Beyond, brought to you by Insurance Journal. Bound and Beyond is a new podcast series exploring the people, the capital, and the technology shaping the future of the insurance industry. Across each episode, we'll bring you candid conversations with the investors, operators, founders, and product builders who are actively defining what comes next in property and casualty, specialty, and the technology stack running underneath all of it. This series is produced in partnership with Bound AI and OIP insurtech and hosted by AJ Beatovic. AJ, over to you.
Thanks, George, for the introduction. We've got a super exciting episode today. This is, as you mentioned, our first episode with the Insurance Journal. So we're excited to get on this platform and to show our take on the market and get a lot more interesting insight from our guests that we'll be speaking to and interviewing. So today we've got a very exciting episode with Joe Zuck, who is the operating partner at Altamont Capital Partners, along with Mladen Subasic, who's a chief product officer at Bound AI. So we're going to get a take from that investor's perspective, along with the vendor perspective too, to see where people are seeing the market move, particularly a lot more on that technology side, and very happy to be here. So thank you for the introduction, George.
All right, AJ, over to you.
All righty. So thank you, everybody, for joining the first episode we're having with the Insurance Journal. So Joe Zuck, very happy to have you on today, along with you, Mladen. So when structuring this episode, I was very excited. First of all, Joe, you have a very interesting background, all the way from your reinsurance background and then moving up to the investment side of the business. So what I would like to understand particularly is what exactly does that operating partner at Altamont Capital mean? And what does that day-to-day look like in today's 2026 world?
First off, thank you again, AJ, for the opportunity to be on here today, and a pleasure to connect with you and Mladen today. So what does it mean to be an operating partner at Altamont or an operating partner in general? Well, I'm fortunate that I come from industry, so a decade on the reinsurance brokerage and underwriting side of the business, almost 8 years on the primary insurance side. I always like to say I got an MBA in primary insurance, working for 2 MGAs, building my own commercial property insurance verticals and running corporate development strategies. And then over the last 6, nearly 7 years here at Altamont as an operating partner, I get to sit on both sides, both on the practitioner side of the business alongside our executive and senior management teams and building various insurance portfolio companies here at Altamont. And then on the other side, with the investors, analyzing both existing portfolio companies as well as new opportunities that come through the door and being able to make decisions as to where Altamont puts their LP's capital behind. I like to say I operate like a force multiplier for our management teams, as well as a Rosetta Stone between the investing principals at Altamont, as well as our management teams across the board here.
So what made you want to get into the private equity Altamont Capital portion of work? I know you started on the reinsurance side. What walk me through that journey exactly? What brought you from the insurance all the way to the investment side? Because that's I have a finance background personally, so I've always been interested in seeing that side of the market. How did you get there?
Really good question. Well, candidly, I got to Altamont through a cold call back in 2015, wow. Pitching them an idea on a roll-up strategy I had with Aligned Capacity. That was a while ago, and over time, got to know where the PE and investment bankers played in insurance and developed relationships, and really just brought ideas and value to them in terms of what I was seeing in the industry and trying to find an opportunity. And Altamont liked a couple of ideas I had, and as they had Embark and Couvert and just making the investment in Accelerant at the time, they said, look, we'd love to have you on board as an operating partner full time. And we had a shared vision of an insurance ecosystem that we've executed here today at Altamont. But the reason why I wanted to move from the practitioning side to the investing side of the equation is I have so many ideas across the insurance vertical and love to dabble in a lot of different things. And really the private equity side gives you that ability to play with a wider playing field and just larger check sizes and frankly more resource and access. And that was what was the big catalyst for my career and corresponded very nicely with the start of the hard market and unfortunately the COVID pandemic and but a lot of velocity and I guess the specialty insurance revolution, as they call it, over the past 6 years. And it's been a wonderful and a lot of fun ride since late 2019.
Yeah, talk about timing. I mean, joining on the funding side in 2019 with the pandemic and then the AI boom at the same time. I don't think there's a more chaotic environment to join private equity at any point in history, really, when you look at it. So
I agree with you, AJ. It's been a
that
lot of
must be a
fun. It's
crazy
been
day to
exhausting.
day.
It's been a crazy day to day.
Yeah.
I think I've worked the hardest I've ever worked in the last 6 years. And every year I was like, well, surely it will slow down or be a little bit
No.
quieter and, catch our breath here. And no, it has not. Every year it seems like the velocity has gone even faster, which is great, right? It's really inspiring and a lot of fun. I love it.
Yeah. I mean, I feel like this is almost a story you tell your kids and people in the next 10 years of what exactly 2020 from 2020 to 2030 played out, just because I mean the market's so dynamic with from the investment side to the technology side, especially sitting here on that bound AI portion where we're working with MGAs and carriers on the daily to implement those sort of technologies. So to move it over a little bit to Mladen, how did you get into the chief product officer position at Bound AI? And what interested you to get into the insurance market, particularly insurtech? Because I'd love to hear your perspective on a few things as well, Mladen.
Uh, it's a very, very good question. My background was completely different. I came from humanities and made a full turn out to kind of doing research in the AI field. So my educational background was really interesting. I started from a bunch of data on human behavior and then ended up on the far end of the spectrum. I think what attracted me to insurance is the fact that I don't think we're giving ourselves enough credit in this industry, but this is where the actual data science, this was one of the origins, the way that the carriers and reinsurers are actually analyzing, collecting data, storing them as that's a unique advantage over the last centuries. It was always interesting to me. It's kind of, I always found insurance to be a kind of a model over the world, like a risk model over everything that's happening in the world. So it's super exciting. There is always a lot to accomplish in this field. So I think that got me super interested in insurance. It's also an industry that it's not like the first industry. If you're thinking about doing technology, you don't go to insurance first. So I went through, this is my, I think, 12th year in the space. So I went through understanding the business, doing the business, and then after that, building pretty much anything around the ecosystem and the life cycle of the policy. So yeah, now, as you said, and as Joe said, like it's getting faster and faster. I don't think we're going to see any slowdown. So now it's getting really interesting, and I think I'm very curious to see what Joe thinks today about. We had a recent panel about whether the MGA distribution model and all this is a fair weather or all weather model. So people are asking really hard questions today: what will stay, what will go, what will transform. So I think I know Joe. We had a couple of conversations already. I learned a lot from him before. So I took my product hat today. I'll just stick around and hear him out on where we think the industry might be ending up.
Awesome. Thank you, Mladen. So to that point, why don't we get a little bit more into the meat and potatoes of where we're seeing today's market. So Joe, there's been a lot of discussion this year around a tighter insurtech funding environment, and you've alluded to that a bunch. So whether AI is actually delivering real returns, sitting where you're sitting today, what are you actively leaning in and seeing people write checks, and where are people pulling back in today's market?
It's a really good question, AJ. I think there's a bit of a, because of the macro, views, right, of the world right now and so forth. And certainly, I think there's been a bit of a pause or certainly slowdown, right? That being said, people are still writing checks. They're still investing. But all of the recent insurtech funding has been with like the AI label. It's like if you slap .ai or AI on it, you can get some sort of funding. I think where it's more interesting though is that, and I think that concentration tells you that, a lot of people are making, a bet on AI without really doing the work of distinguishing, right? Which AI use case is structurally sound and what makes an impact or difference in insurance, right? And I think even looking back a little bit with all the early VC investors in MGAs, MGUs, right? They didn't really understand that is not necessarily 100x return, right? You actually have to deliver underwriting results and returns, and there's this underlying insurance pricing cycle as well. I think where I'm interested is kind of more of the infrastructure plays that operate at the delegated underwriting authority layer with MGUs or MGAs that have specialty data advantages, really understand distribution really well, and are able to kind of develop what I'll call this kind of Trojan horse of third-party data, or ability to kind of capture data in a unique way and deploy that in a way that is capital efficient, data-informed underwriting or risk selection. That's not like an AI insurtech story. I think it's a combination of using AI and technology and data, and then applying kind of old school good insurance practicing, versus something where I'm less interested is like an LLM skin or, I think there were so many of these early stage AI companies that were trying to solve kind of like, hey, we'll ingest and set up your submission and so forth. And, pretty quickly we're seeing like OpenAI and Anthropic and Google kind of eat the world segment by segment, task by task. And, some of those businesses are not worth anything today, right? Or I would say probably not worth anything today.
Yeah, I mean, just so we were recently at InsurTech New York, InsurTech Insights, and just going around to that point. I mean, it's a little ironic because our name is Bound AI, but we do have that 14 years of that operating experience behind us. That's been helpful on our end. But going booth to booth, you could really just ask anything, whether these companies would be able to automate it or produce a workflow, and it seems like the answer is always yes. But the how it's going to get done is usually not very there's not very much around that. It's just yes to everything, and then we'll figure it out once the checkbook comes. So we've been seeing something very similar to that, just touring all these conferences and speaking to other companies as well. But so I wanted to go a little bit deeper in there. Is there any companies today that, and you don't have to mention any names, that you would say are implementing those best practices and actually being able to take advantage of that distribution that AI is able to give you, along with that better data, and then using those more so just general insurance techniques to analyze it? Are you seeing that happening at scale?
At scale, no, but there are certain use cases, and I never name specific companies,
Of
but
course.
I would say there's certainly use cases where folks are focusing on kind of narrow, unglamorous things, and providing, truly AI augmented solutions, right? That, are helping the human underwriter either triage faster, make better, more informed decisions, or provide a better experience, right, for the broker. I think that there's also a play right now on kind of like portfolio level data and really understanding the synthesizing of both exposure and experience information, and then having that context across maybe the industry or historical results. Those are businesses I think that are pretty fascinating. And then the other piece of it too is just being able to analyze both insurance industry data and then pulling third-party data and contextualize that for an underwriter in a more efficient way than they had been previously, and really getting that validity out of that. Those are some really exciting things I've seen recently.
Yeah, and but one thing you said was owning their own context. And that loops in pretty well with Mladen in the sense that Mladen, you've a lot of times said that insurers have to own their own context to be able to obviously leverage the models and the technologies, but at the end of the day, they need to understand their data, their underwriting, what people call it secret sauce, and how to implement that in today's market. So could you elaborate more on exactly what that means?
So I think it just cuts through what Joe said, and it's all connected into one important thing, and that's that secret sauce that Joe is after. So let's take it to this more successful place where there is either a unique access to kind of a asymmetrical data somebody's collecting at a niche, and then they can derive insights much faster and be better at pricing on commoditized markets, or actually offer more of a price bandwidth plus better terms on some other specific programs. Those are the most interesting plays. If we take that to generalist MGAs or to carriers, the game becomes a bit different because there is a lot of information that has been collected over the years, plus the information that's coming through the doors that needs to be matched with what, let's say, the portfolio plays or algorithmic plays are seeking. And then finally, there is operational layer where there is a lot of data being codified into documents still or being received as documents. So what the context means is where I think everything will be going is each organization will have to try to hold that data in a way that AI can reach it, either to surface unique insights or provide operational efficiency or automation. But that data needs to be cross-pollinated and owned by the company itself, but not just owned because by nature they own it, but accessible. And that's the biggest kind of a challenge that operationally we see today is how to actually build that layer that is automation or AI ready, or how to build that layer that can confidently feed the real-time portfolio allocation models, or how that can feed into some algorithmic pricing model which needs to be served at the gate. So I think where everybody should be moving at least step by step, and the moves that we are seeing today is these data infrastructures and platforms Joe was mentioning at the beginning. The platforms are super important. Today, people have to be really careful in selecting who are they installing into their platforms as a business, not just technology platforms, because that will be a deciding factor in that decision, which will, I think, those decisions are going to be even more so important as things get commoditized. How you decide will be how you win. So as tight you can get on the data that feeds into that decision, we will see winners and losers in that space as well. So that's how I feel about that contextual layers in the companies. And of course, legacy is an obstacle, but I think there is no excuse anymore to stay at the legacy because the train is now, it's a high-speed train. It's not moving through the stations. It's literally bypassing everybody. So that's my 2 cents on the topic.
Yeah, and to switch it over back to that investor perspective, particularly when we're speaking about insurtech, speaking to founders. Joe, you've spoken a lot about a lot of founders, particularly insurtechs, underestimating how complex insurance really is. So, what are you looking for typically in these founders and in these initial meetings to get a better understanding of their true, let's say, viewpoint of the market, and whether you think they would be able to address these complexities?
Great question, AJ. I think it comes down to having a notional understanding, right, of insurance, right, and understanding some of the basics, including like the difference between admitted and surplus lines. As simple as that, for example, but also a bit of, I always use the schoolhouse rocks analogy, how a bill becomes a law, right? How a submission from an insured becomes a policy, and the understanding that full life cycle, I think is incredibly important. And that, underwriting profitability, understanding, just the components of distribution, to me is really, really critical. And if they don't have that or have somebody that's one of the co-founding partners on the team, I think it's really hard for us to get all that excited about it, because then quickly you're going to hit a lot of this. The insurance business, right, is certainly a business that has a lot of institutional inertia in it, and is slow to evolve and slow to adapt. And I think if you don't have credibility, if you're trying to sell something novel in insurance with technology or AI, you're going to have a very tough time in getting there. And from an investor or funder standpoint, to me that is less interesting, because it just is going to be that much harder and that much longer of a runway to see progress.
And to that point, are you seeing any players in the market that do have that sort of domain expertise and actually making that combination click?
Yeah, no, we are. I think it's not always the combination of former insurance exec or operator plus engineer. I think it's, a combination of somebody that maybe has some very deep either actuarial or deep technology understanding. I've seen some interesting investment analysts that are also really savants on technology as well, or have a deep actuarial understanding combine and really come up with some pretty interesting ideas, and then applying that, to the insurance sector. So, for us, it's that combination of, practical level knowledge of insurance, plus like a very deep understanding of a specialty within, or a challenge or a problem within the insurance vertical, and being able to address that efficiently.
And I wanted to, at the start of this conversation, we kept speaking about data. So bringing it back to that data layer, you both keep coming back to the same observation. It seems like the spreadsheets have effectively become the core system for a lot of these underwriters. Joe, from where you sit, what does it actually take to move the organization off that? And when I'm asking you that question, I'm thinking not just technically, but also culturally. There's a lot of change management when wanting to make these huge decisions. How are you seeing that play out?
Yeah, good question. And across our portfolio companies, I think I've seen and heard management, and even from the Altamont level, say, "Hey, we're going to get rid of the spreadsheet. We're going to get rid of the spreadsheet," and it's tough, really tough. I fall victim to it all the time as well. But I think displacing it requires the organization to acknowledge that knowledge is still embedded in those spreadsheets, but that needs to be recoded and redeployed elsewhere within the organization, and saying, hey, look, we're not just replacing the spreadsheet, but we're also promoting logic in that spreadsheet, what I call kind of that innate or tribal knowledge that so many folks have, from practicing or being in the industry, and saying, look, we're going to, build upon that, improve upon that, and share upon it. But also, get insights that maybe we didn't even have before through the use of AI. I think that's where it gets really exciting to kind of say, look, wow, AI actually kind of saw this pattern recognition that we didn't see in our business over the course of 5, 10, 15 years, right? And that's where I think if we can get the excitement within the organizations, the AI adoption comes along, and kind of the movement out of spreadsheets and the understanding of good data fundamentals really takes hold.
Yeah, and so Mladen, to Joe's point, from that more on that vendor perspective side, where are you when you walk into these carrier rooms, or MGAs? What's stuck there? So what's the first thing that has to change before any of the technology matters?
That's a really good question. So I do think that the first thing that needs to change is just the understanding that the way that the companies have been operated for a very long time now is going to be rudimentally changed. Let's say you have an underwriting team that lived off of Excels in the past, and to be honest, I have nothing against them. They're not just used to calculate and just because nothing else is available. They're used because underwriters can overview all their information they enter. It has audibility to it. You can trace your decisions back. You can do a lot with the good Excel. I want to some of the best systems we built in the past were built off of a very elaborate Excels with really good structure. So back to Joe's point, it's not the legacy or the Excel that is the challenge, is the willingness to understand that there has to be a step function in order to move to the next level of operating. So let's say that whenever you are talking to large organizations, if there is just a mandate, top-down mandate to implement AI, and they're enabling their organization through use of Copilot, then you know that there is not a true willingness to transform in any way, shape, or form. It's just introducing something that has to be introduced for potential kind of a shareholder value or valuation play games. But where I think we see the largest improvements and the largest traction is organizations that find pieces of business that have a good understanding of how this can change a potential workflow that cuts through all the layers, that cuts through anything from submit all the way to the claims management, just a piece of their business, and they are trying to change it, even if it's custom GPTs they're building in-house. But that just signals the willingness to adapt the new technology, the forward thinking. So if there are pockets of that can be scaled up really, really well. So I think it's just that understanding that the systems or the way the business is done is not broken. It just needs to evolve, and there has to be a willingness between the two. That's my take.
Yeah, and I would say, just personally speaking, when speaking to a lot of our partners, is perspective too. So when implementing something as simple, Joe, as you mentioned earlier, like automating a workflow like submissions, a lot of people, even in today's market, are still looking at the technology expense. And if their technology expense goes up, let's say if they're automating a workflow that costed them $100,000 to do manually, and it costs 50 grand just using automation technology, they're seeing it as, wow, now I'm spending 50,000 more dollars on technology, as opposed to I'm getting those cost savings. And now also my distribution's a lot faster. I'm getting more data and all those additional insights that come with automating those, especially those early workflows within the policy life cycle. So it's a tricky way of figuring out exactly where those exact cost savings are. And to that point, Mladen, and I've seen this a lot with particularly our partners too. And you mentioned that bow tie model. Could you explain could you elaborate a little bit more on that and how that's helping people understand that cost savings model, and then bringing it into eventually generating more revenue, and increasing bind ratios, how that all works together?
Yeah, so just by the experience of the AI projects we have been involved on the Bound AI side as a product that gets to be a part of a larger transformation, projects that get the most funding inside of the organizations, and Joe, I would be very curious to hear your take, but they are mostly admin or operating ratio plays, which means like just cut down the costs. There are a lot of talks about soft and hybrid market now. That's just going to get accelerated. So the first part of the bow tie is actually collapsing the costs of operating business, which means just get either fund the growth, which means by investments in AI and the automation plays, you will get to write more with the same staff, or even release staff and repurpose staff. But it just gets the operating layer first. And then once those initiatives on automation side or data aggregation availability, those tend to open up the growth aspect of it, which means more shorter quote cycles, bind ratios, less losses, and all of that. But I think the understanding is on the left side of the bow tie, where people more get hooked on the cost savings themselves, and it's very difficult to measure downstream effects. But I think just by putting evaluations on opening up the second part of the bow tie and growing more revenue through all these kind of plays on that Joe mentioned on the distribution or pricing side, the AI actually provides both sides. And then if organizations understand that they can get both sides of the tie in a single project and are ready to measure that, that's where we see a lot of success. We are expecting, let's say, day one savings on AI projects, which are healthy, should be at least 50 points down on operating expenses, whilst 15% is on the second part on RevGen activities, but that's also a huge leap. So I do believe this is a unique technology that actually provides both in a single project, and people should have that mindset on measuring. It's not easy to measure though, and teams are reluctant to admit that the second part of the tie is existing, but it is, and we need to be better at measuring the actual compounding gains of an AI project.
So, Joe, I'd love to hear your take on that in regards to internally in these insurance companies where they're putting their dollars today and how they're seeing that.
Certainly, no. I think look that left side, that intake, that quote. I mean, that's the easy piece relatively in terms of, and then not discounting it at all, but in terms of just seeing the actual tangible return on investment and value and uplift, right? I think time to quote and so forth is all improved there. On the right side of the bow tie, though, where quote to bind, there's still a very personable, broker relationship nuance to it, and that has a lot of dynamic to it, both kind of incentives, personal relationships, maybe pressure from the top down. That's not really an efficiency problem. It's more like a trust problem. And then I think it's also a bit of a judgment call. Automation, really is not going to compress that. I think, what's better is, can you provide a faster, cleaner quote, something that is just such a good experience that the friction devolves and then makes it easier for that human decision, to kind of lean your way. I think that's going to be a lot of interesting work around, I think, human psychology and AI and incentive structures. That's actually kind of an interesting area that I think we'll see over the next couple of years as we get some of the fundamentals down, in my opinion.
And to that point, do you think it's going to be a lot more welcoming to those younger operators since they're going to be a lot more familiarized with leveraging those technologies?
100%. And one of the things I'm seeing recently, and I actually think I'm a big believer in this, right, is like answer engine optimization, right, for both research, but also for potentially straight through processing, rate quote by an issue, right? And I'll give you a very good example, right? I was researching, electric cars, right, in Europe over the weekend, and the various Chinese manufacturers and, the European and other manufacturers. And I told my wife, I was like, look, I remember my parents 30 years ago looking at buying a car and going to the dealerships. And I said, what they spend a whole weekend on, I did in probably like an hour through large language models, and then the combination of that, and then the human piece of it through Reddit forums and so forth, of real world like use cases. I was like, okay, I kind of landed on two models. I said, then we just have to go to two places and test drive versus going like through 12 different dealers.
I'm actually pretty curious about the research. So what's in the European car market? What are the hottest the models? I know BYD's
BYD, the Seal. It seems pretty well liked as one. Then you have Leap Motors and a couple other smaller ones, and then you have the kind of the German stalwarts as well. And I think it depends a little bit of how much you care about getting from point A to B, or do you want to be driven or do you want to drive the car?
That's crazy. We even asked that question now, that the fact that a car could just drive you from point A to point B. I mean, I was looking at those models too. You'd see a car on those BYDs. It's like $50,000 car, and it looks like it's $150,000 sports car. So it's 100%, crazy the price difference.
Yeah, and I think to kind of pull that back into insurance is kind of similar as well, right? Is like, can you give that experience to the younger professionals in the industry that say like, wow, this is actually a really nice experience in terms of getting a quote or being able to present, the understanding of a product or explaining to a potential insured like the coverage gap. And I think, the next iteration of leaders in this industry, right, and companies will be the combination of, leveraging AI and tech and where, the broker, the insured wants to do business, and making that kind of experience really nice. And to your point, AJ, if like, hey, you can get a lot of value through this insurance product beyond just like an indemnity, right? It can actually kind of show you where your gaps are and so forth. So that's actually kind of something I don't think the industry's ever really done or done well. No more paper pamphlets, right? About cyber insurance or
Yeah.
things like that.
So we're wrapping up a little bit on time. So I wanted to do two wrap-up questions. Mladen, I'll send the first one over to you, and then we'll finish off with you, Joe. So Mladen, 3 years from now, and with these wrap-up questions, I like to make them a little bit more ambiguous. Something people can think about after once they listen to the podcast. So 3 years from now, what does an MGA's day-to-day look like, and what would be genuinely different from today?
So let's say an value-added MGA that handles a deep, complex product. Let maybe talk about that. I think we will commoditize more and more, and maybe Joe can agree with this. But at the surfaces of, and you said it quite well, the hyperscalers are just eating up everything. So that the surfaces of where software will go to through AI are just going to increase. But let's say where the MGAs will be going is this hyper personalization, specialized complex coverages where the value can really be brought to the insured, and that value exchange will become transparent. I think the data will get exchanged much faster. Submission bottleneck will go away. I think even, and this is more for a discussion, but I think at one point, even the exchange of information through these risk exchanges or marketplaces and deeper connectivity with carriers through more unstructured information layers will also evolve. So the cycles of exchanging information and getting access to the actual books is going to be faster. And thirdly, I think the underwriter job will change a bit. It will be more of understanding these new tooling and getting to the insights faster, whilst providing this white glove approach to the customers and being more on developing market strategies and actually engaging and activating the market rather than just doing the day-by-day, quote-by-quote type of work and administering the risk for 30 or 40% of the time of the day. So I think it's going to change a lot, and hopefully all that value will get transferred both to the insurance and shareholders at the same time. If you ask companies today where they will transfer that value, I think it's shareholders today. But I think that at one point all of that will also be kind of a much tighter value loop on what MGAs are serving the market with. So I just see growth. I don't see any slowdown, to be honest.
Joe, is that similar headspace where you're seeing things?
No, I generally agree with that. I kind of have this macro framework of, a very much K-shaped economy, K-shaped insurance industry. So on the bottom is, and the more commoditized, lower value products are going to be kind of more straight through process, and to the point that, if you're getting bicycle insurance, right, that's going to be self-service. I don't think you're going to use a lot of broker bandwidth for that. And then on the upper end of the K is a combination of more specialized insurance. But I think the exciting thing about data and AI and technology is that it's going to, address a lot of the coverage gap and create new products, novel products, be able to facilitate more financing, which, insurance is the lifeblood and oxygen of the economy for that, especially for financing. And I think if you can combine both a better human experience, better insights in terms of data and AI modeling, you can address more of these specialty insurance coverages. It certainly keeps the accelerator down in terms of the speed of the industry, but it's also, signals that, hey, the specialty insurance market and the E&S market will continue to grow, right? And I know there's been a lot of noise about that recently. It's, oh, well, we're coming out of a hard market, soft market. It's going back to, and yes, we are in a softening market. There is a lot of capital out there, which I think is funded by credit and liquidity. But, we're going to grow alongside AI as an industry. And I think that's going to be quite exciting.
So closing out, Joe, what's the question about insurance you wish more people would ask in today's market?
Great question, AJ. I think a lot of questions don't get asked around kind of, how is our capital in the industry being allocated to carriers and programs that understand the risks that they're underwriting, actually. There's a lot always focused on, distribution and an AI tooling, but very little focused on the actual risk capital side of it. And I think one of the things that, you know, doesn't get spent a lot of time on, or are we reserving adequately, are we charging the right rate for risks, and who's actually owning the underwriting outcomes over time, right? I think is at the end of the day, who is being held for underwriting accountability? Do they have the data there to be held accountable? And for me, I think that's a really important question that doesn't get asked a lot.
For sure. I mean, particularly on that auditing side too, when you're looking at these technologies making more and more decisions, having zero auditing trail, I can't even imagine that sort of nightmare of risk just filled within that, with all the hallucination and those sort of
Totally,
things.
right?
So that's very, very good question that people should definitely be asking if they're not asking.
And I think people forget like the historical
Yeah.
context. I mean, this soft market has been the fastest soft market I've ever seen in my career, and many people I've asked who've been in the industry longer said the same thing. But I think we often forget, like, wait, we're going to make the same mistakes again by like going to the bottom of the barrel on property pricing. But hopefully we can start to change that over time.
Yeah, yeah. Who, I guess history tends to repeat itself, whether we like it or not.
Yeah.
So sometimes you gotta learn the hard way. But anyways, very thankful for having you on, Joe, and for having you on, Mladen, as well. So this is our first episode on the Insurance Journal. I think this is a great way to kick it off with that market perspective. And I hope all of you guys have a wonderful rest of your days. Thank you, everybody, for listening in. Bye-bye.
Thank you.
Yeah, and that email bomb phrase, I'm going to start using on all my future calls. So I'll take that trademark out of your book.
Thank you for watching the Bound and Beyond podcast. In the next episode, host AJ Beatovic is joined by Trent Somerville and Mladen Subasic for a discussion on how AI is being introduced into specialty insurance and the London market. The episode focuses on the gap between reading documents and changing underwriting workflows, what trustworthy AI means in regulated environments, and the operational challenges brokers face when modernizing long-standing processes. The group also discusses talent shortages, implementation realities, and how technology can support expertise rather than replace it. It is sure to be an insightful conversation. See you next time.